Get the latest on what's going on this earnings season, meets, beats, and more in Zacks Earnings Scorecard.
We're going to see what the score is for a couple of specialty apparel companies. Eric Dutram has been putting his notes together here on two popular companies in that space, to say the least. Express Inc. is one of them.
Yeah, and you know, this has been a really strange time for retailers here over the last couple months. A lot of companies coming into this report have been very strong performers. And so, you know, the expectations are a little bit higher that, hey, maybe things have finally bottomed out for the retail world. If we look to Express in their chart, we can see what I'm talking about here. In the previous report, the company missed earnings, and, you know, earnings estimates have been really kind of choppy here, kind of spiking here to start 2016, and then, you know, declining a little bit in recent times. But as we can see, shares have kind of picked up here, moving from this 14 to just under 17 as of late. Things are trading kind of down today on Monday, but you know, it's really going to be a test of when the company reports before the bell on the 24th. The company was just downgraded into sell territory, so it was a hold previously. It does have that A VGM score, so a nice rank there, but some of the most recent estimates have been cut. We do have a negative 6% roughly earnings ESP, so it's going to be a dicey one, but once again, I think really the hope here is, hey, things have finally bottomed out for retail, and you know, we've seen that with a lot of their competitors, so we're going to have to look for the same thing for Express.
All right. And now that you're here, we don't have to guess what's going on with Guess.
Yeah, I'll give you the answer to this question. They report after the bell on the 24th, and Guess, same boat as Express and a lot of the other names out there. If we look to the chart, we can see the company has a slightly worse track record when it comes to recent earnings. A miss here in both the last reports. The most recent quarter was actually over a 20% miss of earnings expectations. And as we can see, estimates have really been trending lower for basically any time period we're looking at for any of these metrics. The company also has a sell, a Zacks rank 4. It does have a B for its VGM score, so once again, slightly better fundamentals on this, you know, some of the other metrics like PE and things like that. This does have a very nice earnings ESP. It's about 33% for this company, so that's something really nice heading into the report. And it does suggest, hey, maybe estimates have kind of been cut a little too far. So, you know, both these companies are very dicey plays for investors, but you know, it's going to be kind of a test of, do they live up to these subdued expectations? So both could definitely beat, but it's probably two to just kind of stay away from and, you know, just kind of sit on the sidelines for both.
I guess that does it for these two.
Yes.
Do you own either one?
Do not.
All right. Check out more stock information, stock picks, stock picking strategies, and more on our website, Zacks.com. Up there all the time, 24/7 for your review. With Eric, I'm Terry Ruffalo.